Welcome to a new update. Today it's Bitcoin time. What are we going to do? We're going to look at the bull and bear thesis of Bitcoin. We're going to look at the TA of Bitcoin and what correlation we should be looking at if we want to see a new breakout upwards. The parties are relatively divided at this point, which means that you can see people expecting to go to 12k because of recession and a debt ceiling, but there are also people expecting us to break out massively to 50k. And I think it's going to be in between, but at least a big move is on the horizon. Before we continue, make sure to hit the like button, subscribe beneath. Also check out our website where you can find all the content that you would like to see with our premium membership. And tomorrow there's going to be a big day and I'll be posting this on social media. There's a complete revamp of the socials going to occur when it comes to my Instagram, but there's also way more going to be happening. Also, if you want to be whitelisted to the course and be able to win one of them, make sure to check out the description beneath. Last week we have been shooting it and it's approximately 6 to 8 hours of content that is included in the first course that we're going to launch in a month from now. Also on Thursday it's going to be macro day and on Saturday it's going to be altcoin day again. We're continuing the 3 times updates as you recall from us. Now, today we're going to look at the TA perspective of Bitcoin. Bitcoin is relatively stable at this point. It's a choppy area and that is getting, at least myself, I'm getting stopped out more often than I would like to. But we are getting ourselves ready towards a big move because the trend right now, or at least the volatility is draining down, which means that there is a big move on the horizon. So we're going to look at the bear and bull thesis of the markets. So let's head towards the charts. So when we're looking at the Bitcoin chart, we're going to do an overall overview today. The first thing we have to realize ourselves is that we are into a chart that is choppy, right? So we have been mentioning this a few times before. We are into cycle 1, bear market cycle, sideways period, bull market cycle, bear market cycle, sideways period, bull market. That is pretty much what we can see here. So the trend itself right now is relatively comparable to what we have been witnessing here in 2019, right? Why is that? Well, it's quite simple. If we look at the structure here, we've had this massive bull cycle. Since then, we started to make lower highs, lower lows, inducing that we are getting into a stage where the markets are currently consolidating or have been trending downwards. Over here, we started to break up again with higher lows and higher highs. So as a result, we have seen that the markets have been getting into a stage where we have been twisting the trend, and at least the bull market has started here already. This means that the bull market has started here also in the previous period of November and December of 2022 as a result, because in this case we have been seeing the retest here. We could be seeing another retest later on around 20k, but I don't believe that we're gonna make new lows as long as we stay above this area of 19k. So in that case the bull market has started, but it doesn't exclude a case of retesting lower boundaries. In that essence, we have been having the trend of lower highs, lower lows, in which the trend is downwards. Now we are getting into a trend that is upwards, in which we can see a case of higher lows and higher highs, right? So we've got the higher low here, higher high, another higher high, and I've mentioned that we are looking at a case of another higher low for the markets. What do we need to look at? Well, we've got 2 important indicators, and that is the moving average, the 200-week MA, and the 200-week EMA. I'll just erase the EMA because it's less significant, but actually I'll just show it. These 2 are quite important, and I'll just do it on lock to see what we're standing here. So you can actually see the importance of the 200 AMA and the 200 MA. In the previous cycle, we had retest around the 200 MA and we haven't really been closing beneath. In the 2019 cycle, the same has been taking place. In the 2020, the exact same has been taking place too. So now in the previous cycle, we can see that we have been moving beneath the 200-week MA, and that has been taking place due to a few important factors, which is FTX collapsed, Luna collapsed, all those sorts, Celsius, Voyager, all those things have been taking place, which induced that the price of Bitcoin has been dropping to a level that has undervalued the most that we have been witnessing, because of the fact that we've also been moving beneath the 200-week MA, and therefore breaking back above it is a crucial indicator. And again, if we are going to get a bounce from the 200-week MA, it's another trigger for you to start looking into long positions. Another conclusion we could draw is that in the previous bull cycle, we have not get to the level that we should have been, which means that this entire run might not be as high as we should have been expecting if we truly had a new bull cycle, through which we potentially should have been around 100 to 150k, then have a sharp correction, and therefore if we're going to have a run or break through 30k, it can start accelerating quite fast and we don't get massive corrections anymore. Then the markets are going to be very comparable to the period that we have in 2016, still witnessing 30 to 50% corrections, but not as heavy as we have been seeing in 2019. So the bull cycle could have already been started here, especially if we're going to flip and hold the 200-week MA as support. So right now we are moving at this level, and that is the important level here, the 200-week MA. We're again holding up there, and we're getting into a stage that we're going to induce ourselves in massive volatility again. If we're losing the 200 MA, that is going to be the moment that we're going to break towards 20k, as I mentioned here, and then we are going to have our sideways period. But if we're going to hold and break up from the 200-week MA, you could start using Fibonacci extension to derive yourself from the first target, which is 34, but also from this entire impulse, you can start identifying 38k as the next area, which is also this block here, and we've got 49k as the second important area. Additionally, if you want to look at this chart, you can say we've got a correlation with the 2-year yields. And I'll just have to move towards the daily time frame to see where we stand. And I'll just erase a few of these indicators to make it more easy. Compare US 2-year yield. There we go. So the orange line is the 2-year yields, and the 2-year yields is basically the interest rate that we have on government bonds. So the higher that gets, the lower the face value will be. That's why the bank has fallen, Silicon Valley Bank, because they had a big bunch of government bonds that dropped massively in terms of face value. They had to liquidate those positions. We all know the story. Government bonds, if the interest rates are higher, it also has an impact on mortgage rates, and it has impact on short-term lending. Therefore, the fact that we currently see that the 2-year yields are running up, but the Nasdaq is also making new yearly highs, doesn't add up. So one of the two is going to be wrong, especially with the DXY showing strength too. But when it comes to Bitcoin, also when it comes to gold, if the yields are going to go up on the government bonds, so the interest rates are going up, usually that's a moment where risk on assets are going to get sold off, because if institutions have a certain portfolio, if the yields are going to go up, they get a higher return on those assets, so they increase that because of the return that they make in the government bonds, and they reduce the entire position on Bitcoin. So that's why you see a somewhat negative correlation between the two. And that's when the yields start to run up. That's when Bitcoin starts to drop, other assets as well. When the yields start to reverse, that's when Bitcoin starts to rally. So what we're looking at here, it's a little bit hard to see, but you can see the entire uptrend that we've had. From September 2021, we started to rally, and therefore we have been into a bear market. The previous 2-year yield high was also the low on the Bitcoin price action alongside FTX. And we also have a case where we've got this peak run that was during the period of the collapse of the banks, that Bitcoin started to drop initially and the yield started to rally up. And then they reversed, and there's also a slight delay, but then they reversed and Bitcoin started to rally again. Now you can also see in the recent price action that the 2-year yields have been running upwards slightly, and therefore Bitcoin has been correcting. So the correlation between the two is quite heavy in a negative way, and therefore results that if the yields are going to drop or going to reverse, then Bitcoin starts to break out. And why is this important? Well, a few indicators are important for the yields, which is the federal funds rate. If the federal funds rate, or if the Fed starts to pause, the yields are going to drop, which means that tomorrow FOMC meeting minutes are going to get there. If there is some sort of inch, or at least some sort of feature saying, hey, we're going to pause, or we're getting there, because Powell has been slightly saying that the yields will start to turn around, Bitcoin goes up. That's what I've also been mentioning, is that the moment they pause, that's the moment where we can have extended relief until shit hits the fan and Bitcoin needs to drop, or the yields need to drop, or the federal funds rate need to drop quite fast. That's the moment where Bitcoin has a liquidity crash too. So that's what we're seeing here, and I'll just move back towards the 2-year yields. On a technical perspective, we can see that we are hitting the block that I actually wanted it to go to. So we're getting into a stage that we are having a rally again. The trend remains to be upwards, but we also have, alongside the Bitcoin bullish divergence on the low, we've got this bearish divergence here, and that implies that we are into an area of a potential top on the yield. So this run here might continue a little bit more, but once it starts to drop beneath 4.2%, it is, 4.23, and when it starts to reverse, that is most likely the case where Bitcoin starts to do really well. And I think we're getting onto the turning point. I'll be discussing this on Thursday too. Total weekly market cap, or the total market cap for Bitcoin and crypto. We also have the 200 moving averages here. We also have the 200 EMA here. If we're going to put it on log scale, we can see the exact same figures. We are swimming around the 200 week MA and EMA. As long as that holds, and it looks to be a very natural period here, as long as that holds, it seems very likely that we're going to have a new impulse, and that can be a significant impulse, and that also lines up with the fact that altcoins 1 year before the Bitcoin halving are a good period to start accumulating. So that's the view right now. The bull thesis for Bitcoin is quite simple. If you're looking at the Bitcoin chart, we can definitely argue that we are going to have a case of a potential breakout in the coming period, which means that if Bitcoin breaks 27.3 to 5, this resistance area, that's going to give the acceleration candle. On the other hand, if 26.7 is lost, and I think in this case you clearly want to see 27k hold for support. If 26.6 is going to be lost, that is going to provide the correction towards 25k. However, Bitcoin still has a gap. There we go. Still has a gap here at 29k, right? The gap on the downside is closed. We still have a gap here at 29.5, which is unclosed. We still need to close this one. And that is probably going to be the trigger where you want Bitcoin to be going if we're going to make that break. So the crucial level for Bitcoin to hold right now is the area at 27k. If we break to 27.5, that's going to induce continuation towards 29.2. On the other hand, if 26.6 is lost, that's when we get to 25k. But I feel like 25k is just the level that people really want to long to. And we're simply not going to hit it, or we are going to smash through it all the way towards 22.5. So tomorrow is going to be a big day with the FOMC meeting minutes, but at least, most likely, the bull cycle has started already. I hope you have been enjoying this update on Bitcoin. On Thursday I'll be back, and instead of doing a macro update, I'll be looking at the top 5 coins that I'll be looking at to hodl in my portfolio. Also, make sure to whitelist yourself for the course. Join our platform, which is public and private. The public one is getting more and more active, so make sure to be there. I'll be doing some requests. I'll be doing some trade IDs once every 2 weeks as well. So make sure to join. And also make sure to follow me on other social media platforms if you want to stay tuned to everything that's going to come tomorrow. Have a wonderful day, and I'll see you again on the next update on Thursday.